Ladies and gentlemen, our monthly interview is overdue with Egon von Greyerz. We are more than 4 weeks since the past one. Much has happened. Egon, how is it going?
Well, you know, Jan, having been in this business, trying to help people to preserve wealth for the last almost 20 years, things are going in the direction that we always expected. Governments are doing all they can to destroy the economy by printing money, by lowering interest rates to zero or well below zero as it is now. And by indicating now, as they did in August, that they're going to do all it takes to save the system and the economy, both in Europe and in America and in Japan. All the central banks have said the same thing. So, as I've said, this to me, this August 2019 is a bit like August 1971 when Nixon took away the gold backing of the dollar. Now they're giving such clear signals that this can only go one way. The system is under pressure, and they are just going to start printing a lot of money in the next few months and years.
Egon, it came to my mind when I was preparing for this interview that it seems to me that once they started walking on a path of madness, they have no chance to leave it and to come to a healthy policy back. You saw now the US has lowered the interest rates. The ECB has even lowered the negative rates more. And you came from the banking business, you know this, such measures will affect the banks on a very negative way. They cut their margins even more. So the banking or the authorities that are above the banks are doing things to destroy the banks completely. It's a path hard to describe, but on the other hand, we still have time to act and to do something.
Well, you're absolutely right. It is a totally mad world, Jan. When people are going to read about this in the history books in the next few decades or longer, nobody will believe what happened to the world during this era. Nobody would believe that the world could actually have the imagination of thinking that you could live on printed money and that you could actually, the system would work with negative interest rates. That is absolutely total madness. You can imagine, it's very simple in my mind. If you print money or if you expand credit, which is the same thing, expand credit with money that doesn't exist, then you're creating free money that has no value. And then we attribute a value to it by using it to buy assets, stocks or bonds or build things, etc., property. But actually, if the money is worthless to start off with, of course, these assets are also worthless. Today, we attribute a monetary value to them, whether that's in euros or dollars or yen, or pounds, etc. But that value is totally meaningless. And when this system implodes, because there's no other way that this sad story will end, when this debt system implodes, of course, when debt implodes because nobody can pay it back, so will all the assets that were financed by this debt, which means that these assets will become more or less worthless. And that's why you can only measure it then in real terms, which is gold, since gold is permanent or constant purchasing power. So that's why I say that a house or a house price or stocks, they will go down at least 90 to 99%, even maybe more in real terms, which is against gold. So that's what we're going to see in the next few years, a total destruction of asset values. Nobody believes it, of course. Most people will think we are mad saying this, but just you wait and just think about it. If you print free or worthless money, it cannot have any value and therefore the assets that these produce or that are bought with this money will also be worthless when this system implodes. Mm. That's what we will see. In the meantime, as you say, the banks, how can the banks survive? They are savings are supposed to be the way you finance investment. That doesn't happen today. That people can't, of course, people don't save. They don't have any money to save. And even if they did, they don't earn any interest on it. So the banks, and you take the German banks, I mean, they're suffering tremendously because there are no savings anymore. They can't make any margin. And even if they get some deposits, they can't make any money on it either with a negative interest rate. This is why, sadly, this will end badly. And that's going to happen in the next few years, Jan.
Purchasing assets and driving them to insane prices is a keyword. I want to show our audience quickly the real rates for some for bonds of the Western nation. We spoke about this in past interviews, and the situation has worsened. I show it only quickly before we come to our main topic, and this is silver, because we were asked about silver a couple of times. So we do this, but first quickly those yields. So Egon, I took this from CNBC. It's from the end of August. I will link it below the video. You see here, it's only explainable with greater fool theory, because we had this in the past. Just give a short comment. We talked about it already, but the situation worsens here, clearly.
Yeah, I mean, how can you have negative rates for 10 years? The system doesn't work with negative rates. This has nothing to do with a system based on laws of nature and the laws of supply and demand. Because supply and demand says if you have unlimited demand for credit, for example, which is the case now because credit is expanding exponentially every year and has done for decades now. And if you have unlimited demand for credit and credit is at the peak, then of course the cost of credit should also be at the peak. You should pay an absolute fortune for your loans. You shouldn't pay minus 0.6. Okay, nobody pays that except for in Denmark. There's first mortgages now negative in Denmark in the Danish bank of 0.1%. The bank pays you 0.1 to borrow their money, which is crazy. But as I said, when there's high demand for something like credit, the cost should be high. But of course, this isn't a free market; it's a manipulated market, and therefore now you have maximum borrowings and minimum rates, and that's what this is the bigger fool's theory, where central banks are trying to manipulate market in a way that will lead to a total collapse, because you cannot have a system where if something is produced in an unlimited quantity and costs nothing or even negative. And this is why it just won't work, Jan. And central banks will see that in the next few years. And sadly, so will all of us, because it'll be a very tough time when all of this unwinds in the next few years.
And Egon, while those bubble assets are so overvalued, like the flowers, the tulips in the Dutch mania, on the other hand, we have an asset that is so cheap. I found a graphic in one of your recent articles. I could hardly believe it. I show it to our audience. It's cheap like dirt. Really, I have to say it so so strongly. I show it in a second. Here we see what it's hard to believe from your article recently. Egon, silver is, if we look at the scale, the top in 1980, which some of us have in mind at around $50, inflation adjusted 840, and now we are where we are at 18 and something. Isn't that totally crazy? How is this? Who has adjusted that?
Well, this is inflation adjusted silver price, but adjusted for real inflation. This is based on the shadow statistics figures, because the official published inflation rates are of course fake, because governments want to show a situation which looks better than it is, and they're showing a much lower inflation than all of us experience when we go to the shops and buy things, or when we buy insurance, or whatever else we buy, you know, except for maybe computers and a few things that are coming down in price. But all the main things that people buy are going up in price. You take housing, I mean, or rents, etc. It's been absolutely ridiculously increase in prices. And so if you adjust for, as you just showed, if you adjust the silver prices for the real inflation, then you're looking at, as you said, the peak in 1970, so 1980 equals more than $800 a day. And I think we easily going to get to that level. Because if you take my long-standing target of gold at $10,000, and if we get back to the gold-silver ratio at 15, which is the average historical ratio.
Egon, let me interrupt you for a moment. I have another chart, the gold-silver ratio. Those gold and silver bucks of us will know it. Nevertheless, I show it quickly. Here, we see the gold-silver ratio from 70-20 to present time. And as you indicated, it's a lot of potential. Means for the silver price relatively rising or increasing to gold.
Yeah, and of course, you know, so if as I said, if the ratio goes back to 15, which is the historical average, and normally things always overshoot, so it could go lower. But if we say it goes to 15 and gold at least goes to $10,000, I know 10,000 is an arbitrary figure, but I think we will be at least there, probably higher with gold. Even in a non-inflationary environment, we will be at least $10,000, because when the paper market blows up, etc. But if you take $10,000 and 15 ratio, you get to 666 silver, which is the also similar to the inflation adjusted. We just saw silver at 800 and 666. I know a lot of people don't like the number 666, but as I have explained, that's actually King Solomon received every year 666 talents of gold in payments and taxes, and you know that 666 talents equals about just over a bit over $1 billion in today's gold price every year. So that's a very positive 666 that you can find in the Bible, not the negative one that people associate with it. So 666 is very much related to gold, and therefore, you know, to a lot higher gold price, as we have been talking about. And yeah, it's going to come on, because the mess we're seeing gold will in the end tell the world the truth about what's happening to the financial system, and so will silver, as you say. And since silver now is this gold-silver ratio that we just looked at is around 84 today, and we're talking about going down to 15, that means that silver is likely to move several times faster than gold. And even if it goes, you know, it will move something like 5-6 times faster than gold. And that's what's going to happen in the next few years. But I have to warn people that silver is extremely volatile. It's nice when it goes up, but the corrections will be just as volatile. So therefore, be careful if you own silver, because you will have some sleepless nights. I often say, as the English expression, silver is not for widows and orphans. It's not for people who can't afford it and can't, as I said, can't look calmly at massive reactions or corrections that we will see. Anyway, there's a great potential in silver. My view is that you should own mostly gold and then some silver. Maybe we say to our clients, maybe 80-20, 80 gold, 20 silver, or 75 gold, 25 silver. And that way you have a good spread and not totally subject to the volatility of silver.
Egon, I will finally add one more graphics. last time we spoke about the development of stocks against precious metals in such money-destroying phases of the history, and I got another one. I show it also here. This is the graphic. It's the Russell 3000 index. Is a US stock index, a very broad index that contains nearly all US equities. And if we look, or if we compare to silver, it's a very long-term double top, and it could go somewhere in this area. And as you said, markets tend to overshoot and to overshoot in both directions. So it could be nearly close to zero. So there's a tremendous potential. We can take the gold-silver ratio to argument for silver, and this also. So we have so many arguments that speak for silver and against stocks.
Yeah, so this shows that stocks now are massively overbought against silver, or if you turn it around, that silver is incredibly cheap against stocks, and at a historical high similar to the 1981. And that, you know, the fall we will see is, as I indicated before, this will be at least a 95% fall of the stock market versus silver, and probably more, probably 99% fall, I would say. Again, it sounds so much that people find it hard to understand, but just you wait, because you have an undervalued real asset, which is money, which is silver, and you have a massively overvalued stock market based on just printed money. And that adjustment will be vicious, and it's not just a price adjustment, of course. It will be an adjustment for the whole world economy, the consequences of this, and that's going to be some hard times in coming years, Jan. So be prepared now. Have at least some, whatever. You don't have to be rich to buy silver. Is, you know, an ounce of silver is $18, whatever, which is what, 16 euros. And 1 gram of gold is $50, or let's say 40 euros. So everyone, you don't have to be rich to own gold and silver. Everyone can buy some every month, and just continue to do that, because the times we're going to have, if you have even a little bit of gold and silver, think about the Venezuelans. They are now, the majority of the people are totally poor and have no money. If they 10 years ago, even 5 years ago, 10 years ago, 20 years ago, had just bought a little bit every month, they would have been now extremely rich, and they would have certainly had enough money, even if they had small quantities, to eat every day, which they don't now. So be prepared now. Even if you don't believe that all of this is going to happen, just buy a little bit of insurance at the level that you can afford, and continue to do that, because that will actually be your life-saving insurance in the next few years, in my view. And, and again, go ahead.
Nice final words, and I'd like to make our audience aware of the fact that you will be a key speaker at the Munich show in November 8 and 9 in Munich, and whoever wants to see you real should come there and come to your booth, have a chat, and touch you, so-called.
Yeah, well, I look forward to that. It's a fantastic show, the Edelmetallmesse, and very much enjoyed that. And now, as you know, I was there many years ago speaking, and now I was there last year and this year, and I really look forward to that. But let me just say a final word again, because people think that I'm spreading doom and gloom and pessimism, but put your house in order, do what you can to preserve the wealth you have, or have a little bit of savings and reserve, and then enjoy your life. Life is too good just to be depressed. Don't worry about this every day. Just do what you can to protect yourself, and then enjoy your you need to have a circle of friends and family. That's going to be your real insurance when times turn bad, because that's what you need. In bad times, you need a good circle, support circle around you, of good friends and family, etc. So, and let's have some fun in the meantime, and especially in November when we get to Munich, München.
Absolutely, looking forward to meeting you there, Egon. See you. And
as always, great, good to speak to you. Thank you, Jan. Thank you.